Thank you for joining us here at Tax Talk UK, where we talk about all things tax and consider other important aspects of working for yourself, being self-employed, running a small business. So today we're going to just consider VAT schemes and what they are and when to use them. And before I talk about that, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you need to, as well as being able to find other information that we have available on a whole host of different topics, all aimed at supporting you in your self-employment. If you navigate to the playlist section of our YouTube channel, then you will find the information broadly catalogued per topic and trading style to try to help you to find the information that is most relevant to you. So back then to VAT schemes. So we've talked about some of the VAT schemes in detail. So we don't intend to go into the specifics of each individual scheme, but more to answer the comments and the questions that suggested that a certain scheme wouldn't be would actually disadvantage the VAT registered entity. So the most important thing to say here is that much as whether you have to register for VAT in terms of meeting the threshold, the rules that you then have to follow, if you are VAT registered, the records and the way that you submit your returns are mandatory. VAT schemes are voluntary, they're optional schemes, and their whole purpose is designed to support the VAT registered entities and to make life easier. And so if you, and to make sure that the VAT registered entity isn't disadvantaged in some way due to what they're actually doing as a trade and the VAT rules. So they're optional, and you would only therefore join the schemes if they're going to be advantageous to you and to your business. If they're not, then you just don't join the schemes. If you've joined the scheme and it's no longer advantageous, then you are able to leave a scheme. Each different scheme has its own rules for eligibility in any case. So that's the most important thing to say, that a VAT scheme it's not a rule. So if we're talking about a certain VAT scheme, to help you to understand it, and you think that it won't benefit you, then you don't join that scheme. So that's the important thing. So just to sort of roughly run through some of the schemes and the benefits that they may bring. So we have, for example, the flat rate scheme. So the idea of the flat rate scheme is to overcome the burden of itemizing all of your individual transactions, and just really to simplify the VAT accounting for you. So this perhaps it could be argued that it was more relevant in terms of the administrative burden of itemizing transactions, was more relevant pre-MTD for VAT, because these days the Making Tax Digital rules require you to itemize all of your transactions. But the flat rate scheme works on the basis that rather than accounting for all of your sales VAT and your purchase VAT on your return, you're just paying a set percentage of your gross sales, and the percentage is determined by HMRC, by your industry, and should be the average for your industry. So the idea is that if you did normal standard VAT accounting or the flat rate scheme, you should pay roughly the same. If you don't, then you wouldn't join the scheme if you were slightly different to others in your industry. So this is a scheme that's in place to help simplify the process. You have the annual accounting scheme, which allows you to just submit a return on an annual basis. We have the cash accounting scheme, where we're accounting for VAT at the point of receiving payment. So this can be particularly useful for when you have customers or clients that, you know, perhaps they take a little while to pay, or you give good terms and you have less purchases out, so that you find that you are actually having to pay VAT before you've got the money from your customer, and therefore that's having an impact on your cash flow. And again, as I mentioned, all of the VAT schemes we've covered individually in more detail. So this is just really to give you a flavour of the schemes available and the reason for them. Then we have the VAT margin schemes. Again, we've covered the scheme in detail in other videos, so won't go into the detail here, but you would only join that scheme if it was favourable for you. And the idea is that for people that are trading, buying and selling items where there's no VAT in most circumstances, for them to reclaim on their purchase, and they're having to charge VAT to their customer, the margin scheme aims in effect to take the purchase element out of the VAT calculation. So if you imagine if you're buying and selling items and there's no VAT, you're not buying VATable items, or that you're not able to reclaim the VAT on those items, but you have to charge VAT on the full sale, then this can really impact the viability of a business in some cases. So as I say, it takes the purchase element out, and only the profit, the margin, is used to account for the VAT. So the important thing to understand is that there are VAT schemes available, but if you should look into them before you decide whether they are right for your business. And generally the best way to know that is to have a comparison and say, well, actually, if I did just without joining any schemes, if I did standard VAT accounting, what does that look like? If I join the scheme, what does that look like? And if you're happy that it is for the best for your business, then you simply join the scheme. But the important point that I wanted to get across is that a VAT scheme is put in place for the benefit of the VAT registered entity, and they are voluntary to join. So if you're looking at a scheme and think, well, this wouldn't be favourable to me, this is not fair, it's not the scheme for you, and you just don't join it. So hopefully this helps to explain and help you to understand that there are VAT schemes, but if we're talking about a VAT scheme, it's voluntary, and you should investigate whether it is the best for your business and the most advantageous for your business to be in the scheme. And if that changes, you can leave the scheme. If you're not sure, then of course you should take professional advice to take some advice. And if you're doing that, as we always say, then you should make sure that the person you're engaging for that advice is qualified to help you. They have professional indemnity insurance in place, and that if applicable, they're a member of a professional body. Thank you very much for watching. Goodbye.